Today's market call is presented by Fidelity Investments and their all-new advanced trading platform, Fidelity Trader Plus. With Fidelity Trader Plus, you can customize your preferred tools and charts and tap into crucial data across all your devices. So I can save an order on my desktop at home, get a mobile alert here at the studio, and complete the trade in the Fidelity app without starting over. Try it for yourself at fidelity.com/Trader Plus. November 24th, Guy Adami here, always joined by Dan Nathan. Short week, holiday shortened week. Thanksgiving, obviously, on Thursday. Dan, how are you?
I'm doing great, Guy Adami.
You look strong. You're wearing black. I'm wearing black. Although the market is the market is in the black today, as they say. Usually, if it's in the red, it's lower. In the black, it's positive, and we are well in the black on this Monday.
Yeah, we are. Maybe Amanda can pull up a S&P chart for a second, and enough with the pleasantries, Guy. We're just going to get right into it. As you said, holiday shortened week. One of the things about this week was always interesting to me, and this was I know this sounds crazy. The kids out there, there was nothing. I mean, when did Cyber Monday become a thing? Like I don't know, maybe like 20 years ago. I don't know. I mean, I don't feel like Cyber Monday was a thing in the late 90s. I don't think anyone had their credit card. You didn't have your credit card in the internet until 2017, 2018 or something like that. But there was always this really interesting move in consumer related stocks into Black Friday. Part of it is like a lot of folks are traveling on Wednesday. Thursday's closed, and then all of a sudden, Friday's open for a half day, and you used to see a lot of wacky action, like really low volume, right? Folks could move stocks around, that sort of thing. Maybe it's a bit seasonal sort of stuff too, and you'd see retail or you see e-commerce, those sorts of things just rip. And then I think, because of Cyber Monday, but now Cyber Monday starts like 2 Mondays earlier, you just have this general seasonal sort of move. So it'll be interesting to see how this sort of plays out this year. There's a lot of talk about, record. You hear this record amount of shoppers going to this and that, or record amount of numbers, this and or whatever. But you never know. There's obviously a lot of companies are very promotional, and they seem to be promotional nonstop. Like I said, Cyber Monday is like 3 weeks long now, and that's not always great for retail margins, right? And so I don't know, man. It's like these weeks sometime, Thanksgiving week, they can really be abnormal in the way that you see low volume rallies.
Yeah, agreed. And it's not coincidental that, and if you go back shorter time, if we look where we traded down to and held on a much shorter, go for a couple weeks, we traded down to that 6,500 level. And I mention it because we had been mentioning it for a while. Obviously, that was the low in October. And we said you close below 6,500 in November and we're going to have problems. So the fact that that was defended is actually a very encouraging sign. And obviously, some of the reversals we've seen over the last couple of trading sessions is encouraging. Of course, the problem potentially is we still have, about a week or so left in the month, understanding that this week could be, some strange things could happen. Friday, half day in the market. So, there's a good chance we don't get anything strange to the downside this week, but we'll see what happens the last couple trading days of the month next week.
Yeah, pull up the 50 and the 100-day moving average on this chart also. And Guy, you and I had remarked, I think, on the pod that dropped this morning on Risk Reversal Podcast, 3 Fridays in a row, there's been something that saved the stock market. When I say saved it, at some point in the morning, we were down at lows for the week, I think. And, and then there was a headline, what happened on Friday was that Fed governor or president or whatever, Williams, said the likelihood of a cut is greater. And then you saw literally the CME Fed Fund futures like double from like 35 to 70% probability of a December 25 basis point cut. That helped the market. And then in the afternoon, you still had NVIDIA and a bunch of other related AI stocks were still getting hit really hard. Headline comes out that, the administration is considering letting NVIDIA sell the H200s. That saved the AI stocks. So a lot of it seems very, orchestrated, if you will. Maybe they can pull up like a 1-month chart here. So the only point is we sliced through that 50. Then we held at that support level with the 100 that we talked about, that 6,500 that was resistance became support. But your point, if you were to fail and you're taking out 6,500, I'm hard pressed to think that you're not going back towards that 200-day, let's say just below 6,200. And just really quickly, guy, if you can eyeball those reversal days over the last few Fridays, those are the days that we're kind of talking about here. And when you have a reversal day like that, go back to that spike bottom. We talk about this pattern of spike bottoms, right? Where you close at the low the prior day, you go much lower, right? The day, and then you reverse and you close at the high. Usually you'll see a follow through. That's kind of what we had also this Friday. We had that 2 Fridays ago. So again, is that 200-day? If you have an outside month, we don't have that many more days to do it. Do you see that 62.50 or something like that coming into play?
Well, that's exactly what comes into play. And again, there's some real estate left in terms of trading days, without question. I think bulls will be encouraged by the fact that we held the 50. I think that's the 100-day in the sort of the middle line. That's encouraging. But now we find ourselves between the 100 and the 50-day, and we'll see. We'll probably vacillate for a couple days. If we were to close below 6,500, I think there's a 75 to 80% chance that we test that 200-day moving average, which is going to be about 61.75 or so. And, that's a pretty high probability, but you don't often see, forget about outside days, outside weeks, outside months is something you haven't seen in quite some time. So if you were to get one, you have to respect it, I think, a great deal, Dan.
Yeah, and I guess on a year like this, we've had 2 consecutive 25% up years in the S&P 500, right? A lot of folks were comparing what we've seen so far with this secular trend of AI and, really going back 23 and 24. We know that 23, this ChatGPT, thing just really started to take hold, right? And so we saw what was happening in video. We saw that what was happening in the hyperscalers. This year, it's definitely broadened out. We've talked about memory. We've talked about the server guys. We've talked about the storage guys. We've talked about, the actual property guys, right? Or gals. We talked about the neo clouds, right? So the trade has broadened out, but it's also really getting concentrated within the Mag 7. So let's pull up Google today. And this is one that, again, it seems like no shortage of headlines. And in a large part, I read a great article over the weekend. I think it was in the Information Guy. Do you remember after ChatGPT came out and all the major model makers, were like scurrying around to get their models out, right? And Google launches Bard, which was the predecessor of Gemini, which is the one that's really taken the tech world by storm. And it was a disaster. Do you remember they didn't even have live demonstrations of it? They were showing screenshots. Stock absolutely got killed. This was early 23. And, they had this FTC case that actually got resolved, obviously, a few months ago. And part of the judge's ruling was that, yes, they had dominance in Chrome, which is their browser, and search, but because they were lagging so far behind in AI, that if they were to make them, divest or spin out Chrome and all this other stuff, they would be disadvantaged. Now, all of a sudden, think about this. The company is getting higher marks for their models with Gemini 3 than ChatGPT. Sam Altman has put out internal, memos suggesting as such, you know what I mean? And now Google is just they're just running away with it.
Yes, is the short answer. And you synthesized that very well. And now it appears as though they're sort of in the pole position in terms of the big stocks that we talk about. And I think that's fair to say. And even with this move, valuation, I don't think is still a concern. The problem is, if there is a problem, you still have that gap in the chart back from September or so of this year. I think that's sort of out there. I don't think we're in any short-term danger of closing that gap, but keep in mind it's there. You hate to see these big moves to the upside because they reek of sort of blow off tops. I don't know what volume is today, Dan. You can look it up for me, but yeah, I'm pretty well convinced we've probably already traded a normal day's volume, which I think is about 35 million shares or so. If not, we're probably close. So we're going to have a huge volume day today on a day where we gap higher. That to me is never, it might look great, but it's typically sort of the last gasp before we do a bit of a back and fill. Now, the real question is, what is the back and fill? What does it get you down to? And I think the logical level, the first logical level was where we closed, 280. But the real logical level is the prior, I think, all-time high, which is about 254 thereabouts, that we basically just made, I want to say, in the middle of September.
Yeah. 30 million shares so far.
Yep. So there you go. Yep.
Yes, you're good at that, guy. You're like the best guy at guessing. Like we do that like with vol, like we do it with vol
Rain Man.
terms. We do it with deltas. You know what I mean? No, but you're just picking stuff out of the sky. Yeah, the Google thing. Listen, this is one of those moments, and even like Mark Benioff, CEO of Salesforce, there was an article out this morning saying that he's been using ChatGPT for 3 years, and he's getting off of GPT altogether, and he's only using Gemini, which I think is interesting. And a lot of this stuff from some of these CEOs, I'm sure it's a bit of horse trading. I'm sure it's a little bit of like FU sort of stuff. You know, Benioff is totally, they've been telling an AI story, but they are being disrupted. Make no mistake about it. And so maybe he's looking to ingratiate himself a little bit with Google. I want to go through a couple of these Mag 7 charts, guy, because they're real. Let's end with NVIDIA, okay?
Mm-hmm.
Look at Amazon. And Amazon's interesting. They are building their own small models, okay? They obviously, AWS saw reacceleration. Look at where this thing's. All right, so you saw that gap to new all-time highs after earnings. Investors like the reacceleration. Doug Cass, our good friend, reminded me last week we talked about, he's like, dude, he basically, after we talked about it, he's like, yeah, they saw acceleration like 1 percentage point, year over year, that sort of thing. Fine. I mean, investors were buying it hook, line, and sinker. Look where it stopped at those like prior levels, the 200-day. Do things like this look interesting to you to play for a move, let's say back towards, 250, 260 or something like that? Especially, let's just say what we got as a sell-off in the last week and a half. Let's say that was it. Do you go back into a name like this?
All right, so the 50-day and the 100-day are basically the same price. I think 228 or so. You just said we held the 200-day moving average of 215, which was really important, not only for the 200-day moving average, but it also got us down to the lows that we saw in early to mid-October, right? There was about 210 to 215. So that made sense and that held. Now, how do you play it here? This is how I would do it, Dan, and I'm sure you have a different view. I'd rather buy it on a close above 230, and then you're through both the 50 and the 100-day, than to sort of buy it here. And you're going to be like, well, that's sort of dumb because it's 225. Well, to me, you'd get validation that we're basically, have made a short-term bottom and are reaccelerating to the upside on a close above 230. I think here, you're sort of flipping a coin. The odds are probably still in your favor. I think they're more in your favor on that close above 230. And then I think obviously your stop loss is somewhere. I mean, it's far away-ish, but somewhere in a close below 215. And I think that's how you set up the trade.
Yeah. The one thing, and I'm not so far off of what you're thinking here. Like when I look at this chart, like if Amanda can draw a horizontal line from that September high, you basically get a gap fill, back to that sort of 240 level. So for me, I might think about like a call spread where I'm looking at maybe the 230 level, which is basically what you're talking about, right? Like, so maybe I might look at the 230, 250 or something like that, maybe in December expiration, because and this goes back to what I started saying before, we've had those 25% consecutive years, right? A lot of people were saying, well, it's like the 90s, from 95 to 99, we had, 5 consecutive 25% gains on the back of this huge secular shift, right? Right now we have an S&P that's up about 14% of the year. We have a NASDAQ that's up 18%. So my point is, if that was it, the only way we get reaccelerating to an S&P that's about, up more than 20% by year end is these names joining the party. Let's pull up Meta. This is another one, right? So barely saw an uptick, since its earnings report. Sooner or later, is this thing just overdone? Are there gaps that need to be filled? We talk about gap fills all the time. That one seems like a long ways away if you're going to get yourself back towards 745, 750. But just like this thing might have overshot to the upside, this thing didn't go parabolic like a Google did. You know what I'm saying? And so maybe you get a move back towards that 200, which is not a gap fill, but it gets back to that opening print from that gap a few weeks.
So this is dangerous. I don't know what dangerous is anymore, but you see moving averages start to basically cross. You see the 200-day moving average here for the first time in a while. We've obviously flattened out. If you really want to get down to brass tacks, we're probably starting to slope lower. You see the 50-day moving average is precariously close to the 200-day moving average. So there are a lot of things to be concerned about here. The good news is, we sort of traded down to the level, that sort of gap level from May, if you want to draw a horizontal line. Yeah, we didn't fill it, but close enough. So this is one, in terms of Facebook, I mean, we could rally up to any one of those moving averages. The likelihood is 675, but there's a chance you overshoot all the way up to the 100-day moving average, which is about 715 or so. So I think, listen, I don't think it's over to the downside in the long term. I think in the short term, though, this is set up for a really nice bounce.
Yeah, 625 to 675, right? That 200 day. I like that. We're kind of in the same camp. All right, now let's look at Microsoft. Microsoft now, I mean, it's pretty fascinating. We just talked about Amazon's only up 3% of the year. Okay, we talked about Meta, which is up 3.5% on the year. Like, think about that relative to the NASDAQ. Think about where we are. And now let's look at Microsoft, which is up 12.5% of the year. So look where that stopped. And people ask us, why do you use these technicals? Why do you look at these moving average? Why do you look at RSIs? For some reason, people, they really do serve. You know what I mean? I mean, it's really crazy. You and I have been doing this for a long time. All right. So you see this move, that double top 550. You get all the way down to that 200-day moving average at 486. We're kind of barely bouncing today, guy. Or 466, sorry.
465, 466. Right.
Like when you see the sort of like strength that we have a NASDAQ 100 up 2.3%. We have an S&P that's up 1.5%. You see Microsoft up 65 basis points. That's not something you want to buy right here, but did it do enough? Did it stop there where it should?
Well, it stopped where it should have, for sure. I think you obviously just said that in the form of the moving average. Now we're going to find ourselves again in between the 200-day on the downside and the 50 and 100-day. But again, like those other charts, the 50 is starting to, well, we're on the verge of basically going through the 100-day, which you see from time to time. I think what's going to wind up happening here is we sort of trade sideways between these two moving averages until it figures it out. I will say this, a close below 465, in my opinion, is probably on the back of a broader market sell-off, but it absolutely sets you up for a gap fill. And that gap fill is back from, I think, early May, and it was like $400 or so. I might have been a little bit higher, but right around that $400 level.
Yeah. I mean, and just to kind of bookend these two, like Microsoft and Google. Okay. So Microsoft, they invested in OpenAI. They use their technology. This is a B2B, business to business story. That's all it is, right? There was a time where people thought this would be great for Bing and search, and no, it's got nothing to do with that, right? And then if you look at Google, it really is about consumer oriented. It's about basically defending their, their search moat and really what does this technology look like across Gmail and Productivity Suite and YouTube and, the list goes on, right? So, and they have the distribution. So these are the two stories. That's B2C. The other one, Microsoft, is B2B. And so to me, I think Google is, and I know you've been in this camp, as I have been, this is the name. I say it on a pullback, but it's getting harder and harder on a pullback, right? You had that consolidation, then it broke out. We had another consolidation. But which brings me to Oracle. And we'll do Oracle and NVIDIA, and I promise we'll move on because there's stuff that I know you want to do. So this sliced through that 200-day, filled in the gap, kept on going. This is a name that we've been talking about because they didn't have the money. They have to raise a lot of debt, or they have raised a lot of debt to fund that OpenAI build out, right? This thing acts so poorly. We've been talking about credit default swaps, not something we talked about a lot, right? Going back, let's call it 15 years or so, they're kind of getting really wide. They're trading at levels they have not traded at in many, many years, going back to 2022. So investors are protecting against a default of this company because all the debt, maybe they lose some of those contracts. They've already taken the debt. The debt is basically, trading poorly. To raise more money, they're going to have to basically offer higher and higher rates, right? So is this just like a no touch? Let's also draw a horizontal line. It takes you to that high from January, right? And it goes all the way across. You saw that huge breakout. Let's go lower. Let's go to the January high. Yeah, right there.
Right there.
Right. And that's where we are. I mean, could this be a more important level for Oracle?
Well, you go back, and so if you drop that line and you go to the June gap, and you'll see what I'm talking about. So that's really your level, 175, 180 or so. But let's just play this out for a second. You just said we violated the 200-day moving average, but let's see how it closes today. I think you need to close basically above 210 or so to get it back above. This is precarious here, in a word. I thought it would hold, to be honest with you, the first gap from September, which was about 250 or so, and it looked like a hero for a day until it started to cascade lower. But as we said on Fast Money, we've said on this show, this is sort of the canary in the coal mine for some of these other names. So I think it's imperative that this thing close above 210 in the next couple of trading sessions. Otherwise, I believe we're probably headed back to that little mini gap back from, I don't know, mid-June or so, which I think is what, Dan, about 175 or something like that ish. I might even be lower than that.
Yeah. It's kind of like, yeah. I mean, listen, this is one that I just think you got to pay attention to. Amanda's got the CDS, the 5-year chart of this thing, and listen, this could be something that we are totally misreading. You know what I mean? And I know this is something that Danny, Vinny, and Porter, our big short friends have been talking about. They talked about it on their podcast. If you're not listening to it, you gotta listen to it. So obviously the On the Tape podcast, Danny is a the host of, and then they also have a Friday Night Dirty guy. Friday Night Dirty, it goes out on their Substack, and it was Danny and Vinny this past Friday. Great stuff. You should subscribe to their Substack. I love it, man. I'm listening. I'm reading it. I'm listening to the Fridays, and I obviously listen to the On the Tape podcast. But they've been talking about this. I know Vinny and Porter, they've been open about it.
David Faber brought it up as well. And everything we've talked about, the last like 6-7 charts that we looked at, it all speaks to understanding timing and customizing things. And when timing is everything, you need a platform that can meet you where you are. With Fidelity Trader Plus, you can customize a chart or start a trade on your desktop setup at home and pull it up in your phone or laptop at work. Fidelity built their new advanced trading platform from the ground up with better connectivity and more powerful tools than ever before. Traders can make smarter, faster trade decisions from anywhere, Dan.
Yes. And that whole notion, I don't know about you, Guy, but I've been out and about when I'm not have this mic in my face. You know what I mean?
You're moving.
I need to go. I need to know what's going on in the markets. I need to have access to the tools so I can trade, that sort of thing. So appreciate that and our good friends over there at Fidelity. All right, last one, and we'll move around because I know there's some other sectors you want to focus on here. Let's pull up NVIDIA. This is the thing that kind of started the crescendo late last week. Great report, great guide, right? Stock opened up a lot, failed. Kept on going lower the next day. I mean, just to be really clear about what they printed last week, okay, on that quarter, year over year, 60% earnings growth, okay, year over year, 62% revenue growth, year over year, they saw their gross margin, right, go higher from it actually year over year went
flattish,
lower. But sequentially it went higher and is expected to go higher to about 75% is what they guided for next quarter. The stock is up, let's call it 33% on the year. If you look at valuation, folks have not been too worried about on an earnings level. Next year, it's supposed to be 24.5 times. Okay. Still trades at 20 times sales this year, 14 times next. 14 times next, Guy, and 25 times earnings, 14 sales, 25, given what this company's done, their market share. But it seems like investors are finally concerned about AMD, about Google's tensor process units, about Marvel and Broadcom. I don't know why I start with Marvel, but Broadcom and Marvel doing, custom silicon.
Competition.
Yeah. Yep.
And what competition means is margin deterioration. And nobody seems to think, and listen, maybe they have that kind of head start and they've built and created that type of moat and that kind of ecosystem, quite frankly, on the software side, on the integration side, where competition is not going to be a thing. That would be the first time, I don't want to say the first time in history, but that would be the few times in history that a company in this type of sector, in a very cyclical sector, very easily commoditized sector, has figured it out. If they haven't figured it out, though, and if competition comes in a meaningful way, I think and I certainly know that 75% margins are going to be a thing of the past. And when margins deteriorate in this environment or in this sector, they never really reaccelerate. You never get that reinflection. And I think that's important to point out. So we haven't seen it yet. We saw glimpses of it earlier this year, although they promised us you'd see a reacceleration in the back half. That has sort of happened. We'll see how long it lasts.
Yeah, and the only thing I'd say is also, a lot of folks are raising some noise. Doug Cass had a great note on streetpro.com talking about not just depreciation, but the other way that these chips cycles, have been thought about for training versus inference and the like. If you see, like two things: less demand. We are not even talking about less demand, right? And then you see some sort of accounting, calculations that don't line up with existing, street expectations for depreciation schedules and the like for their customers. Amanda, draw a horizontal line, please, going back to January 25. Because, Guy, you'll see where this thing lines up right here, the breakout level. That right at that
moving average.
So $154. I just want to tell you like one way that I might look at. You said something about probabilities before. If you were to go, let's look out to, I want to say February expiration in NVIDIA. Okay. This is options expiration. It's February 20th, right? And you see where the stock is trading right now, $182, let's call it, right? So if I want to go look at, let's call it $155 or 154, let's go look down in February expiration, the 155 put is trading at $5.50. Okay. It has a delta. Okay. So that's the probability of it basically being at that strike, 155 on February expiration. So that's giving us 3 months. It's basically saying there's a 20% probability of it being back down there. Now, I don't know, man. That seems kind of low to me. Don't you think so? 21% probability if we're just thinking, and that's back of the envelope sort of stuff here. I think there's probably a greater than 20%. And maybe I'm using some qualitative inputs, you know what I mean, on that, some of the stuff that we just talked about. Thoughts there, because that would be the level. And would that be so crazy, Guy, for it to get back to $155 from that all-time high, which was what? I'm looking at it right here. The all-time high on 1029 was $122.
Yeah, not 222.
222.
Yeah. I think there's a very good probability of that happening. And when I say very good, I think more than 40%. So double what the options are implying. So that would suggest those options are cheap. So it's sort of a cheap play. And then if things start to move for you to the downside, you can get creative. I mean, you could trade against that long put. If you really want to get fancy, you could sell a downside put against it. I mean, there are a number of different things you can do. But yeah, I think at 20%, the market is giving you the opportunity at 20% to own something that I think has more of a closer to a 40% chance of coming to fruition.
Yeah, and by the way, if you got down to 155, that's like a 29% or 28% peak to trough decline, which
we've seen before.
Yeah, we've seen plenty of time before. All right, before we move from tech, I just want to run through some stuff that I'm seeing other than those names. Okay, so Broadcom and AVGO, maybe Amanda could pull that up really quickly. It's up nearly 10% on the day. You don't have to pull all of them up. I just want to see that. Like, that's still in this consolidation period. Look at the moves that this thing has had over the last 3 trading days. Okay, just like it's pretty. Do a 3-day chart. I mean,
crazy.
Like, okay, really quickly. Tesla's up 7%. Okay. Taiwan Semi's up 3.5%, but fine. That's a big company, big stock. AMD's up 5%. Even Intel's up 4%. Micron's up 8%. Western Digital's up 8.5%. Seagate's up 7.5%. SanDisk is up 13%. Celestica, contract manufacturers, up 11%. I'm just looking around. Okay. So, like, Guy, to me, that's not bullish. Like, when I see those volatility bands widen the way we just saw with that Broadcom, SanDisk, pull up SanDisk, SNDK, also another one I'm just fixated on. Like, I look at that sort of price action back and forth, and I say to myself, I don't think it's bullish. You know what I'm saying? If you're thinking about the health of this trade, at least in the stock market, you know what I mean, as far as the AI, contribution.
People getting chopped up. And this is, when you're short volatility, you get these exaggerated moves to the downside in individual names, and then you get the same exaggerated moves to the upside. You see it in individual stocks, and you see it in indices as well. I think probably the impetus for everything you just mentioned was there was a headline on Friday about the administration, I think, allowing NVIDIA chips to be sold in China, which I think really sort of, I think that was the next leg higher in the rally on Friday and gave the semis some sort of air cover. And I think there's this détente between Elon Musk and the administration now seemingly over the weekend that probably has Tesla on the move. So a couple things happen that the market's viewed as positive. So we'll see how long that lasts. And again, on a holiday shortened week, it's hard to sort of fade these things, to be honest with you.
Yeah. Something that Vincent Daniel on the What Are We Doing, the Friday Night Dirty, this that dropped on Friday afternoon, he and Danny had a conversation just about some of the flows that they were seeing in the market. And you and I had remarked on this when we were recording the Friday risk reversal pod that dropped this morning. We're talking about home builders, right? So one of the stories obviously was, the probability, or at least what John Williams was saying about a 25 basis point cut, which we just kind of hit for the December meeting. And we saw home builders just scream, right? So we didn't see a huge move. We saw Fed funds futures move, but like we looked at the 10-year US Treasury and we see it at 405. The 2-year, as you would say, is more important. We see that at 352. Should home builders have been moving that aggressively? Like they were up 3% across the board. And what Vinny's comment was that it's probably a bit of an unwind, right? You see folks that were short home builders buying them back, right? And then he was also talking about, the potential for a lot of long short equity, getting off sides on the NVIDIA thing, you know what I mean? And seeing that kind of sell off and then really kind of pressing some of those other things. I mean, when you see an unwind, sometimes it's just a 1 day, 2 day sort of thing. But that was a move in home builders we just didn't think was appropriate.
No, I'm inclined to agree with Vinny on that. So I think that was twofold as well. I think the jobs number that did come out gave some air cover to people saying, all right, if home builders are going to sell off on the back of an employment picture that's sort of cloudy at best, but deteriorating at worst, that didn't seem to manifest itself in the numbers. And people said, okay, that's one less thing to be worried about. So I think that's got a lot to do with it. And obviously you just mentioned some of the dovish commentary out of that Fed official, which also helped. But I'm still of the belief that the labor market is deteriorating, and that although the Fed can talk dovish, hawkish, whatever they want, I still think rates are going to be very stubborn in terms of the rates that matter for home builders. And those two things to me are not supportive of home building stocks, despite the fact that they've rallied significantly over the last couple trading sessions.
All right. If Amanda can pull up JP Morgan, this is something that you've highlighted, I want to say, for 2 months or maybe a little more. So we're starting to see delinquencies in auto loans and student loans, and even some, mortgage sort of stuff. I'm missing one. They're coming back.
Auto, housing, student loans. Yeah, I mean, it's
credit cards.
Credit card debt.
We haven't seen these sort of delinquency rates 90 days since 2010. Okay, so you've been highlighting that. So, JP Morgan's probably the highest quality lending. We can all agree on that, right? But look at this thing over the last couple months. It's had 8% peak to trough declines from all-time highs. Let's tighten this chart up a little bit. Like, let's go out a little bit longer term and, make it a 1 year. Yeah. So guys, look at that breakout level from those highs early this year. So if she wants to draw a horizontal line on that thing. Okay. Look at what that 200-day moving
right at the moving average. Yep. Not coincidence. And listen, the 200-day moving average is basically you're up. It's basically a trend line. If you look at the way look at the way it's created, right?
So that would be a 13% peak to trough decline. That doesn't seem that unrealistic. I just want to throw it out there because this is, best bank, right? This is good bank. This is best bank. I mean, this is stuff that you want to keep an eye on. If we were to take out that low from October, right? Like you probably have a good chance of this thing going down to the 200-day, and then we see what happens. That was the breakout level. That's the 200-day. That's, that's a level it should go to.
I agree with that. And listen, don't take our word for it. Listen to what Jamie Dimon said in the last earnings call. He pointed out that his stock was expensive and they weren't looking to buy back. He has said that before, by the way, and he's saying it again. So obviously valuation's a bit of a concern for him. And you're right to pull up the delinquency rates. Before we get out of here, there's one sector that I think we've done a good job. Big cap pharma. And look at Bristol today. Look at Merck. Look at Eli Lilly. All these stocks are getting back on their horse in a meaningful way. And you're getting some biotech performing as well. So maybe it's not a rotation today because everything seems to be higher. But, that's Eli Lilly. Pull up a Merck chart. The first time it's been above 100 in quite some time. Bristol Myers having a big day. I think we talked about this with Liz Thomas last week as well. I think people are underestimating what's going on here in pharma.
Yeah. What about Novo? So Novo, Ozempic.
That
Yeah, no,
sucks.
but yeah, my only question is that was in a trial for Alzheimer's. We're all rooting for all these drugs to do amazing things for a bunch of, diseases that, we haven't been able to figure it out. Is there any point in which you say the at least the Wegovy and the Ozempic business for what they are, diabetes and obesity, is just getting too cheap, or is it
Yeah.
that Lilly is having so much more success with their drugs?
No, and listen. That's it. You just hit the nail on the head. The problem is, I said that probably $50 ago that
Yeah.
I thought that was their whole other businesses is being completely discounted with the stock move. Yet here we are at levels we haven't seen in 3.5 or 4 years, which is, in a word, pretty remarkable, especially against the backdrop of the broader market doing so well and the sector doing so well in addition. So this is peculiar to me, in a word. Now, I don't know what the volume is today. We basically just traded down to levels we saw over the summer. Maybe it holds here, but for me to continue to come on these different shows and say, Novo's too cheap, at a certain point you just I'm just flat wrong, and I've reached that threshold a number of times.
Yeah, the only reason I bring it up is it's still a really important story. We know that, it's going to be the pricing's coming down. And so if they can make up margin, right, in just, as far as, a lot more folks, getting access to these drugs, like that would be a good thing. Tomorrow on the market call, guy, we're going to do a bunch of retail. There's actually a lot of earnings after the close. Let me just pull this up for a second. So we have Alibaba pre-opening. Maybe you could say something about that really quickly. We also have Best Buy pre-opening. We have Kohl's. Yeah, we have Kohl's, A&F, and Best Buy pre-opening. Maybe just give us a touch on retailers. We talked about sometimes the activity you see in this week, but
it's the retails. I think we've done a good job here. The have and the have-nots. If you want to play a little stock market in terms of like Kohl's, maybe we're starting to look at a bearish to bullish reversal. We've been basically sideways to lower over the last couple of years. If this thing can close above, I don't know, 17 and a half so in Kohl's, maybe you have some room up to the prior highs in 24, which is about $30 a share. But the reality is, and I think we've done a really good job here, the winners are pretty self-explanatory. I mean, Target continues to suck in a meaningful way. Look at the tape today. Look at what Target's doing today. It's down 1.5% on a day where the broader market is ripping. You juxtapose that with Walmart, which I think we've done a good job. Yeah, Walmart's down today, but it's within $4 of an all-time high. And meanwhile, Target's at multi-year lows. So it's one of those things where you got to know what you're buying. I think the other stock we've done a really good job, and we've talked about this for years on this show, is TJ Maxx. Now, we're lower today by about 1%, but this is a stock, you pull up a chart, Amanda, this has been lower left, upper right for the last, and you can go longer term if you want. You'll see what I'm talking about for like the last 3 years or so, Dan.
Yeah. All right. Last one. Let's just look at Best Buy because we all can. This is holiday shopping central, right? Like this is where you see a lot of activity. So I just want to highlight this: 4 consecutive gaps lower after earnings. Okay, you see the gaps, and maybe just Amanda, get rid of some of that crap with the moving out. You see that it just held that 200-day moving average, right? And you can see with your eyes an uptrend off those April lows, right? You see that 200-day moving average, better than expected results, backward looking, positive consumer commentary. I'm not saying this is what's going to happen. Positive consumer commentary. You probably have this stock back up at 85.
85, yeah. The highs that we saw in late October. Yep.
And it could be on its way to 90 to fill in. I just want to make that point, to fill in that gap from late February, early March. And so, but bad commentary about the consumer. We just talked about delinquency rates, credit cards, student loans, and auto loans. Okay. That should not, to use a Guy Adami term, augur.
Augur well. Draw the trend line, Amanda, from the April low and then connect it with the August low, and you'll see. I mean, that is a pretty solid uptrend line, and there you go. I mean, your eyes can see it. Bang, spot on, right? So there's your trade. You're basically getting long against that trend line. You're stopping below 73-ish. I'm rounding down. You're looking for the first move to 85, and then the gap fill to the upside. Close below 73, and you're out.
Yeah. Just really quickly, the implied move there, just so we can eyeball it, to where, So you see that 74.5 or 73.5. Is that what you're saying? Like you want to stop it there, which is
I think
that.
so. 73, 70. Yeah.
Yeah. So the implied move is about 7%, right? You do the math on there. 10 would be 77. So or 10 would be $7. So you're talking about like a $5.50 move in either direction. So that actually, isn't it weird how that happens, guy? It gets you exactly to that downtrend, 73.5. Last one, Baba. It's the B in your tube. Reports tomorrow. Look at just if she can pull this up. Look how this thing is ripping today. Okay, so it's up 4.5%. Baidu's up 7%, reported last week. But you look at this move, it's like doesn't even look like anything. You know what I mean? Like, so did it get back to draw a horizontal line from those March highs?
From the March highs. You got close. You didn't get exactly there, but I guess you did get there. I didn't realize it got that low. I think, well, you know what I think because it's in my acronym. So I still think higher. A lot of people think this is grossly underpriced. I think the setup into earnings is the best it's been in a while, given the sell-off we've seen since basically late September, early October. Valuation is still compelling in a word. I think Vinny and Porter probably still own the stock. I'm sure they pared down some of their risk, but this was one of their big long positions late last year into this year. So I think the setup for Alibaba is really good into earnings.
Okay. Jimmy Cliff fan guy, RIP.
I love Jimmy Cliff. Yeah. No, I have all his stuff on my 900 song Spotify playlist.
All right. So if you're listening to this and you're probably watching
No Woman, No Cry, or
yeah, this is no, please. That's not Jimmy Cliff. That's
Bob Marley.
Bill's laughing. That's guy's sarcasm voice. Right? The Jimmy Cliff. Whenever you say, "Oh, I love such and such," I have all of their stuff on my 900 song playlist. That's
my brother Greg was over Saturday night.
Greg Adami.
And somehow, I don't know how, he said, and I'm being serious for a second, he said one of the best concerts he ever saw was Radiohead on the OK Computer tour. And he said there was something about that show and the audience and whatever.
It's amazing. It's one.
And I looked at him and like,
see what it says there on the Yeti?
Oh, I see.
OK Computer. Now, the Radiohead album, 1997, is just the letter O, the letter K, Computer. It is literally one of my all-time favorite albums. They actually are playing this week in London. A friend of mine went over to see it. Hopefully, they're going to be here in the U.S.
Yeah. No, I was saying the same thing. Hopefully, they do a U.S. tour. It's been a while.
Bill thinks that's funny.
I don't know what's so funny about it. It's been a while.
Reggae was never a thing with you.
My first Bob Marley was the thing because a bunch of the guys I knew smoked weed in high school, so they listened to Bob Marley. And then my junior year, Mark Leahy's senior quote for the yearbook was "No woman, no cry."
How do you remember that?
I remember everything.
Just for anyone who's wondering,
I remember everything.
Just for any of you guys,
"No woman, no cry."
Guy Adami has never puffed.
No. The Magic Dragon. No, I haven't.
I know you haven't. I mean, I'm sure you've been exposed to some secondhand.
Oh, no. When I was working on the floor of the exchange, and this is now 1986, 1987. This is not the New York, so the Mercantile Exchange of COMEX.
Yep.
There were guys doing blow in the bathroom.
Whoa.
Every day.
Family show.
No, I mean, it was no joke. I mean, it was crazy, the shit that went on.
Well, I think people have this perception about Wall Street because of the 80s, because of just how, the movie, the Wall Street was. I mean, the movie literally was called Wall Street, right? Like it's pretty, that was pretty creative.
Yeah.
Oliver Stone.
Well, they couldn't call it Broad Street because nobody would have known. Although, oddly enough, the New York Stock Exchange is on Broad Street. It's on the corner of Broad and Wall, but
down in the Ticker District. There's a great talking about like titles of movies, like being really like creative. One of my favorite movies of all time is True Romance, which was written by Quentin Tarantino. It was directed by Tony Scott. It's got a murderer's row of actors in there. Christian Slater. I know you're a big Christian Slater fan, and I think he's a big fan of the podcast, by the way. Right? But there's a scene in it where there's a movie producer And Christian Slater says to him, because they have the dailies, it's running in the background, the dailies. So they record, they record a scene or whatever, and they show the dailies, and then the producers and the editors that make some decisions about it. And Slater says to him, "Oh, what's this?" And he's like, it's the sequel to Coming Home with a Body Bag, which is, he was meant to be like an Oliver Stone sort of guy, meant to be like Platoon, right? And he goes, "Oh man, that's great. That movie, I love that movie. Like, what's the sequel going to be called?" And he goes, "I don't know, Body Bags 2." And he goes, and then he goes, the producer says that really sarcastically. He's like, "That has got as much as creativity as something or other, male anatomy or something like that." But really, really funny sort of thing. You know what I mean? Because Wall Street, what was the second Wall Street called?
Money Never Sleeps, I believe.
Wasn't it Wall Street 2 though?
Yeah. Then they do. It's like people that write books like, GFY, and then they have like 10 words underneath it.
Because, GFY, really?
Well, no, I didn't want to say the actual.
But
you know what I mean? Like, there's no books, it's just one word anymore. Like, they have to put like a whole soliloquy under the title.
Yeah. Well, okay.
Let me see do I have a book handy here that I could show you? No, I don't. I had one before, and I don't. Sorry about that.
If you were on a podcast and someone said, "Okay, last question, I ask every one of my guests, what are you reading right now?" Or favorite book, or a book that someone should be reading right now that's relevant to what's going on in the world.
1920, Andrew Ross Sorkin's 1929.
Awesome book. I read it.
Well, I'm not reading it because they didn't give us a copy.
Just amazing. Guy called him out on Fast Money. Kramer's on there. He gives us signed copies.
Jim came on the show. Never been on the show, but this is Jim Kramer. Never been on Fast Money on set ever in 18 and a half years. He brings books with him. He does personalized inscriptions to each one of us. Jim Kramer. Andrew, who I also love, came to the show, brought Ugats.
Ugats, that means nothing in Italian.
No, I mean, and then Mel said, "Well, they're the bigger, but they're heavier books."
She did say
I'm like,
that.
"Are you shitting me? They're heavier books?"
Yeah. I'll read. Kramer gave me a signed copy. I'm going to read his book. How's that? Andrew did not give me a signed copy, but I still read his book. I'm reading.
Andrew. I love it. I mean, Andrew should have known better. He should have shown up and written like, glowingly, like, "Dan, so great to get to know you over the years. Proud of all you've accomplished. I hope you enjoy the book."
I'm reading Oz Perlman, The Mentalist. He had a book that came out just a few weeks ago called Read Your Mind. And I went to the book party. Oz is a friend. Love the guy. Brilliant guy. The book's awesome. It's not about, he's basically talking about all the sorts of things that he uses to basically do his act, right? He's saying there's
sorcery, for example.
He's saying there's no magic. He's like, I read people. I don't read your mind, which is, you know what? I've been with the guy a bunch. You've seen him on the show. You've seen him do all this stuff on TV. He's doing something, man, because there is some magic in there. But the book's great. And the other thing I'll just say is, like, it's so positive. Like, in this day and age, you just read so much stuff on a daily basis that just beats you down. It's negative, this and that, whatever. It's just a really positive outlook on life. I think it's really applicable to a lot of stuff that people do in their personal life, in their public life. Great book, Read Your Mind. And Oz Perlman, check it out.
My man Oz, he should come on the show. We'll do a book thing.
I think he's coming. Oh, he's going to come on the pod, and we will do a book giveaway. But don't be afraid to go buy it right now, guys. Should we get out of here? Should we get out of here?
I mean, the holidays are coming up. Yes. Today is Monday. Tomorrow's Tuesday. Thank you, Guy.
So you're recording with Liz Thomas this afternoon. It will be in the podcast store tomorrow. I'm recording with Deirdre Bosa. That will be in the podcast store on Wednesday, the Risk Social Podcast. Then you and I are doing an old school Danny Moses, Danny Nathan, Guy Christopher Adami. That's going to drop on Thanksgiving. How cool is that?
Can't wait.
Can't wait. Okay. On that note, we'll see you tomorrow. We're gonna do all those Odell after the close tomorrow. That's gonna be a big one. So we're gonna preview that. We might trade it. Who knows? Okay, guys.
Why not? See you later.
All right, see you. Bye.
This episode of Market Call is presented by Fidelity Investments and their all-new advanced trading platform, Fidelity Trader Plus. Try it at fidelity.com/Trader Plus. Fidelity Investments and Market Call are not affiliated. Views, opinions, products, services, and strategies discussed are not endorsed or promoted by Fidelity Investments. Fidelity Brokerage Services, LLC, member NYSE, SIPC.